This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options training program. And what we're going to get into is Market Mondays for 4/5/2021. We're headed into spring. Market's running really fast. And so what we want to do with this particular broadcast is give you a really quick and succinct analysis of the market for Monday, give you something to look forward in the week, put it in very, very plain, basic English, and not because you're basic, because we don't want to overcomplicate things. And what we really want to do is get you to see the possibility of the markets, how it can improve your life. And we don't want you to feel like you got to go to school for 10 years. You got to get a PhD. You got to have a background in economics, or you got to be one of those people on CNBC or Fox Business with a suit on to be able to really understand the markets. So what we try to do is give you some market-based education, try to make it entertaining, try to make it interesting, and also not try to have you watching this broadcast for a very long period of time, because we know you got things that you want to get into because starting off Monday, and we're going ahead and we started the week off running. So let's talk about it. So Dow closed up green 1.13%. NASDAQ closed up green 1.67%. S&P 500 closed up green 1.44%. So we know now, we looked at on the weekend stock market talk. And if you haven't caught those, go catch the weekend stock market talks. I should be putting a playlist together probably today or tomorrow. We talked about it being seasonally, the S&P 500 from a seasonal standpoint, also the NASDAQ. I didn't check the Dow. It normally runs really hard starting off this month. So we saw last week, the month started, I want to say towards the end of the week, the market ran really hard green. It was closed on Friday because of the holiday. We saw today, everybody pretty much hit the ground running. And so we saw the market pushing really, really, really hard coming out of the gate. And we understand that from a seasonal standpoint, from a seasonality standpoint, the market is historically green this time of the year. So therefore, people may say, well, you may not be able to time the market. Their analysis of the market is you can't time the market. However, the market is seasonal because buying behavior is seasonal, which impacts revenue of companies, which means that some companies perform better during certain times of the year, which therefore creates seasonality in the market. Okay, so what we want to do is they say that the market was green because of employment numbers was really, really positive last week. But we understand that we can look at a 20-year chart of the NASDAQ, of the S&P 500, and understand that at the beginning of April is normally when the market starts running really hard to start the month off. And then we see, it continuing to spike up towards the end of the month. The 10-year treasury note was around 1.71%. And we understand that, maybe 3-4 weeks ago now, maybe a month ago, when the treasury note was around 1.6, the whole market tanked. Now the treasury is around 1.7. And now people have rationalized why that's not a big deal. So in their mind frame is that, if the economy is healthy, is not a negative that the treasury note is now 1.7. Where let's say 4 or 5 weeks ago, it was a negative. So we saw that the market very quickly became desensitized to the spike in the treasury. Then we saw West Texas Intermediate and Brent oil futures were down around 3%. And one of the reasons is because OPEC stated that I believe that they were not going to cut production as much as may be expected. So that means there's going to be more supply, which means that the actual demand is going to go down. Now, what we want to understand is that I personally believe, and this is not investment advice, I believe that the energy market, the oil market is going to go up, probably in the next 1.5 to 2 months. And I believe that they're going to create a justification for that. So we want to look for an event that we believe is going to spike oil outside of maybe OPEC saying that they're going to put a cap on production, which we know will cause the market to spike back up because of consistent demand or increase in demand, but a decrease in the supply. Now, let's talk about the jump outs, right? So we're going to talk about companies that perform really, really well or did not perform that well and kind of give you some context around them so you can kind of get a deeper understanding of what's going on. So we want to look at the SPY ETF, right? And so what we saw when we talk about this on the weekend stock market talk is that we were trying to figure out, can we get the push towards 400 and then go above it? We saw a lot of volume on that 400 strike that expired, I believe, today. And what we saw is that we pushed towards that, right? When we pushed past it. So if you look at the chart on the open, it gapped up really hard. So it closed around 400 on Thursday. When it opened today, it closed above 402. And it pretty much just kept going up. And we did not see a real sell off in the SPY today. So the market was really, really strong green today. We closed around 406.36. And even in the aftermarket, it's still up a little, but we don't necessarily know the volume on that. So what we want to do is observe. Do we get a little bit of a sell off and a little bit of a pullback in the SPY, or does the SPY keep continuing to run? Because this, to have it go from 400 to 406 in one day is a big move. So we may see a little bit of a pullback in the SPY on our way back up. So, we may see a little bit of a dip and then see it move up on its way past, the 402s and the 403s. So what we want to do is we want to observe that. Now looking at Facebook. So Facebook shot up, same thing, gapped up, and we closed at around 308. Facebook has been around the 300s before. It sold off a little bit. So what we want to do is observe, find out, can Facebook support this? I knew Facebook. I can't say I knew it, but I was fairly confident that Facebook would come back. It was just going to take a little bit of a time because some of the things that they had going on with Apple, and then also some of the things going on in the overall economy. So Facebook is a really strong tech company. It's not a speculative tech company. It's not a fly by night tech company. So we knew that once the tech sector kind of got repaired and kind of started to bounce back, it was going to be one of the companies that was going to lead it because it is such a strong company. It really drives a lot of revenue and it's really well managed. OK, so Facebook is moving up really strong. And we want to see really now what price points can Facebook be supported by, because one thing that is surprising to me about Facebook, it's interesting to me what the market will, I wouldn't say require, but what the market will maintain from a price point standpoint for Facebook. So I remember when Facebook was, 220, 225, and I thought that was a really good price for them. And they shot up way past that. They shot them to the 250s, 260s, 280s. Now we're at 300. So I want to really see how far we think Facebook could run, because Facebook could start becoming one of those tech companies that has a really high premium on its share price. But the market believes in the company so much, it just supports it. Now let's look at Norwegian. So what's interesting about Norwegian is that I think the CDC said that they're not going to be able to do cruises until I think later this summer. Norwegian kind of said that they want to try to figure out, can they return earlier than that, because they have testing for coronavirus. And they said that they've essentially tested all their crews that are going to be allowed to be on ships. So Norwegian wants to get on the water as fast as possible, because we understand in their business, if the boats are sitting in dock, they're not making anybody any money. So you got to get those boats on the water. We got to get those boats full so we can start trying to generate some revenue, so we can start making some money, because these cruise lines have essentially had a majority of their revenue been cut off since almost this time last year. So they're very anxious to get back. So what they're trying to communicate to the CDC is that we have processes and SOPs in place to make sure that, one, our crew is safe, and then also make sure that we can test people that are going to be coming onto our boats, so we don't have a bad scenario, because they're very enthusiastic about getting back to business, because they're essentially running event-based business and they can't run the events that we call cruises. Then they don't have an ability to make any money. So they're very gung-ho. So we saw, because people are kind of optimistic about their future, especially with the cruise lines, they believe that, Norwegian is going to continue to move up. And we saw it also that gapped up today from, what it closed on Thursday. So what we want to do is continue to observe the cruise lines. My attitude was always that I think they're great recovery plays, and we're going to talk about that a little later, as long as they can get back to business before they go bankrupt. And then we got to figure out which companies have the best balance sheet and also have the best go back to market plan, best promotions, things of that nature, so that if they had to take on some type of leverage, or, or had to issue out some type of debt, to maintain themselves while there was a shutdown in the business, how long is that something that they're going to have to deal with? And will that affect the stock price going into the future? Now let's talk about the topic of the day. And we want to talk about our recovery plays, the plays to make. So what I mean by recovery plays, I mean plays that were hurt because of coronavirus, COVID-19, the market's perception of how those particular, how that particular disease or illness would affect the performance of these particular companies. So what we're looking at is Planet Fitness. So we have a gym where you go into the gym. It's, it can be very crowded, a lot of people on top of each other. And then with, reports coming out and recommendations coming out saying that people need to social distance, you need to wear face masks, things of that nature. It hurt companies like this, because the big box gym model is pack as many people into the room as possible. Right. And that's kind of how they make their money. So with the social distancing recommendations put out, and you're only supposed to have so many people inside a building based on the square foot of the building at one time, they didn't have the ability to do the type of business that they need to do to become successful. So a lot of these type of companies, gyms, cruise lines, airlines, event-based businesses. A lot of them were sold off. People divested out of them. They moved their money into other areas to try to figure out, is this going to be a good place for me to put my money until I can come back into these areas? So now as the economy is starting to open up, the question we want to ask ourselves is, are recovery plays good plays to make? And so what I want you to do is start to really investigate what companies do we think are going to recover as more and more people get vaccinated, because we're going to start to issue out more and more vaccinations. So if you believe that a company was impacted or harmed by COVID, then how will those companies start to recover over time? And that's kind of the question that we want to ask ourselves. So do we believe recovery plays are plays to make? It's going to be, I say, a case by case scenario. If a company really was not performing really well before COVID, and then now they got hurt really bad by COVID, it doesn't necessarily mean that they're going to be a good recovery play, because they were not already recovering. So I know a guy that talked to me about a travel company. I looked at their balance sheet. It really wasn't that great. Looked at their historical stock price. It really wasn't that great. So now, even though that we're going into a recovery, they may get a boost from recovery market and from the sentiment or the emotion of recovery. But before COVID, they really were not a well-managed company. So, COVID essentially being over, right, may not save that company. And so we want to understand is that if the company was badly managed before COVID, everybody going back to some sense of normalcy or normalcy after COVID may not be what it's going to take to save that company. However, you can benefit from companies that are going to get a spike, especially as we start pushing more and more into the summer. And I told you to watch that July 4th date. I think that's going to be a really big date that the government, the administration is going to try to push as a kind of like a demarcation line of, okay, everything's not supposed to go back to normal. You may have some companies that get a big boost around that time. And as a result, they really start to run and they gain back a lot of what they lost during COVID. So you may want to say, hey, let me pick 1 to 2 companies out. Let me observe them. Let me watch them and try to kind of determine, are they going to be a good recovery play to make as a result of COVID? Right. And that's something I really want to encourage you to do, because it can put you in a position to make a lot of gains relatively fast, because you may be dealing with some stocks that can currently be undervalued, but they'll start to regain their value once they can start doing their normal business. So that's going to be Market Mondays for, I want to say today is what, the 5th. So 4/5/2021. Want to ask you to like, share, and subscribe. If you know somebody can get value from this, share it out. Try to take this information and try to figure out how you can put yourself in a position to make some money from it, because that's really what this is all about. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.